Welcome back to another pipeline trading video. It's great to be back. And today we've got a fascinating one for you. We're taking a deep dive into Bitmine Immersion Technologies. And trust me, we are going deep on this one. Before we get started, make sure to subscribe, like, and comment to support the channel. It genuinely helps, and we appreciate every single one of you. At first glance, the name Bitmine makes you think of a traditional crypto miner warehouses filled with servers grinding away on digital assets. But that's not what this company wants to be known for anymore. If you look past the name and focus on the balance sheet, you'll notice something very different. Bitmine has effectively pivoted. They're no longer just a mining company. They've become a digital asset treasury vehicle. Think less like a gold miner digging in the ground, and more like Fort Knox holding the gold. This pivot centers around what the company calls the Alchemy of 5%. Their stated goal is to own 5% of the total circulating supply of Ethereum. Let that sink in for a moment. 5% of the second largest cryptocurrency in the world. That's an enormous ambition, and, surprisingly, they're already well on their way. As of Monday, February 2nd, 2026, Bitmine holds between 4.14 and 4.17 million ETH, representing roughly 3.45% of Ethereum's total supply. They are currently the largest fresh money buyer of Ethereum on the planet, and fresh money matters. This isn't an early adopter sitting on old wallets. They're actively buying today. So why does this matter? Ethereum operates on a proof-of-stake system where ownership equals influence. The more ETH you control, the more governance power you have over the network. Bitmine isn't just investing in Ethereum. They're repositioning themselves to become a major decision-maker in the ecosystem. They're no longer passengers. They're trying to grab the steering wheel. Now let's talk about the balance sheet. Between digital assets and cash, Bitmine is sitting on approximately $14 to $14.2 billion in total assets. Out of that, they hold roughly $915 to $988 million in pure cash. That's nearly $1 billion in dry powder, ready to deploy. Operational revenue tells a very different story. Over the last year, Bitmine generated only $7.19 million in revenue, although that figure is up nearly 80% year over year. The number that scares investors is the $4.87 billion net loss. But here's the key distinction. That loss is not operational burn. It's driven almost entirely by non-cash accounting adjustments tied to crypto price volatility. Under current accounting rules, crypto losses must be recorded when prices fall, but gains cannot be recorded unless the assets are sold. That means Bitmine absorbs downside on paper, but none of the upside. The income statement looks terrifying, even though cash is not leaving the company. One of the most controversial moves Bitmine made was acquiring a $200 million equity stake in Beast Industries, the company behind Mr. Beast. At first glance, it looks like a distraction. But strategically, it's something else entirely. Beast Industries gives Bitmine access to over 450 million subscribers. They didn't buy a YouTuber. They bought a customer acquisition funnel. Crypto's biggest challenge isn't technology. It's adoption. Bitmine is betting they can push DeFi and digital asset products directly through the creator economy, bypassing expensive traditional marketing. It's an arbitrage on attention. Let's look at the stock. Bitmine has been extremely volatile. The 52-week range spans from $3.20 to $161, a nearly 5,000% spread. Currently, the stock trades between $22 and $32, representing an 80% drawdown from the highs. However, we are getting to levels in support where a rebound could be closer than some suggest. It's not to say that we can't go lower, but selling pressure is close to exhaustion. Here's the most important valuation metric. Bitmine trades at a price-to-book ratio of 1.0. That means the market is valuing the company at exactly the value of its assets and assigning zero value to the operating business. For value investors, that matters. Volume supports the thesis. Bitmine is trading roughly 45 million shares per day. High volume following a massive drawdown often signals capitulation, weak hands exiting and strong hands entering. We can see this in the filings. Sumitomo Mitsui Trust Group purchased 3.7 million shares, representing nearly $200 million in investment. Other institutions, including Robeco and Commonwealth Equity Services, are also accumulating. These are not speculative trades. These are conviction positions. Now let's talk about the risks. First, there is concentration risk. Bitmine is effectively a leveraged proxy for Ethereum. If ETH goes down, this stock goes down with it. Second, shareholders approved an increase in authorized shares from 500 million to 50 billion. That gives management the ability to issue massive dilution if they are not disciplined. Third, there is management uncertainty following the termination of the company president without cause. These risks are real and must be acknowledged. The bullish thesis hinges on one major catalyst launching in Q1 2026. That catalyst is MAVAN, a proprietary Ethereum staking solution developed by the company. Instead of holding ETH passively, Bitmain will use MAVAN to stake its Ethereum and earn yield directly from the network. In Ethereum's proof-of-stake system, staking typically generates 3 to 4% annual yield. On a digital asset base of roughly $14 billion, that could generate over $100 million in annual recurring revenue, paid in ETH and compounding over time. This is a critical shift. MAV transforms Bitmine from a passive digital asset holder into a cash flow generating digital infrastructure company. That yield can cover operating costs, fund expansion, and most importantly, reduce reliance on issuing new shares. If MAVAN performs as expected, it fundamentally changes the company's financial profile. So what's the verdict? This is a high-risk, high-reward setup. You are buying roughly $14 billion in assets for an $11 billion market cap, with strong institutional support and a near-term catalyst that could materially change the business model. Based on the asymmetry, this earns a bullish score of 8 to 9 out of 10. The thesis is simple. Wait for staking revenue to hit the books, prove cash flow sustainability, and allow the valuation gap to close. That's our deep dive into Bitmine Immersion Technologies and the alchemy of 5%. It's risky, it's volatile, but the math is undeniably interesting. If you found this breakdown helpful, don't forget to like, subscribe, and comment to support Pipeline Trading. I'll see you in the next one.